Welcome back, traders. It's your boy, the Executioner FX, and welcome back to the December locked-in mentorship program going on right now at Kingscrownacademy. Okay, so today this is episode 3, and we're gonna be looking at key levels, confirmation patterns, execution system. By the end of this lecture, you're gonna get a whole new system put in place for your trading. All right, you're going to build a whole new system around your confirmations and your executions. I'm going to be giving you the blueprints I use. All right, I'm going to be giving you the criterias and the check boxes I tick before I take my trade. So you're going to be achieving that on this lecture. You're going to understand everything around key levels. So let's go into the lecture. So key levels, understanding the battlefield. That is what I titled this particular slide. All right. Yeah. So I want you to think of key levels like a battlefield. Okay. Now, key levels are simply zones where the market has reacted strongly in the past and is likely to react again. Okay, that is just the simple definition of what key levels really means. These are important levels of price action that you know that, okay, based on previous data, since price has reacted this way at this particular level before, yeah, it gives me a reason to expect another reaction around that particular area or level. And yeah, it's not just anyhow zones or areas on the chart. There are some specific areas, all right, that we mark out as key levels. And yeah, that's what we talk about: your major support and resistance. That's also where you talk about your supply and demand zones. You mark out your previous day highs and low. You mark out your weekly high and low. You mark out your liquidity pools, okay, and you mark out your fair value gaps, your order blocks. All right, so these are other important zones we consider as key levels on the chart. So yeah, think of it as a battlefield. All right, think of key level as a battlefield where buyers and sellers fight for dominance. Okay, so your duty is to come to this chart every day and mark out your key levels. The first thing first, mark out your key levels for the day, for the week, for the month. Then you expect price to react around those areas. Now, this is a chart example of what I mean by that. All right. So on this chart right now, you have a major resistance level, which is part of our key level criteria, and you have a major demand level, which has already proven that, okay, price got to this point and then it reacted from there. This is a weekly chart of ZAU, my weekly chart of ZAU. I use as an example to show you what I mean. Okay, now look at the weekly high and low swept. All right, now immediately price swept this particular weekly high. All right, price reversed. All right, now there is a reaction. All right, because why? The above the weekly height is a strong liquidity, below the weekly low is a strong liquidity. All right, above this weekly resistance zone is a strong liquidity, below the demand zone is also a strong liquidity. All right, the fair value gap within this particular weekly demand zone is also another area of key levels. All right, and that is how you mark out these levels. And once you see price get to that point, expect a reaction, as you can see on this chart right now. Okay, so properly marking key levels. Well. If you want to really understand how to mark out your key levels properly, I want you to take note of this particular side of this lecture. Okay, so number one, you mark fresh levels only. All right, new untested levels react better than old levels. Okay, so sometimes the old levels are already weakened, so price can easily trade through it. Okay, but then it depends on the time frame you are building your narrative, okay, from. Now, levels with strong displacement, I will show you later on the lecture. All right, the practical examples of this. Okay, so this level of strong displacement are area where price breaks from a level with huge candle or explosive move, leaving a fair value gap behind most times. Okay, so these are very important levels you need to look out for. Okay, now, multi-time frame alignment use. See, for you to be able to mark out your key levels, you need to be able to apply top-down analysis. Although that's a class for another day, I'm gonna treat top-down analysis as a full topic, all right, on its own. All right, maybe later on this lockdown mentorship, but this is just like a micro view of it. Okay, how you analyze using multi-time frame and align the narrative from the higher time frame, the medium time frame, and the lower time frame. And you do that when you move from your daily to 4 hour for day traders. All right, these are the key zones. The higher time frame you move, you build your bias. These are the major zones you rely on as a day trader. Okay, now also your middle time frame is your 1 hour time frame to your 15 minutes time frame. That is where you look actively to trade. All right, because sometimes immediately price hits 1 hour liquidity, there's always a reaction. Okay, so if you're trading, your middle time frame is 1 hour to 15 minutes, then your lower time frame are your entry point and your execution time frame, and that's time frame between 1 minute and 5 minutes. Okay, now if a level is visible on multi time frame, that make that level very powerful. If you see a level reacting for multiple time frame, that means that level is powerful. Okay, so there are three types of liquidity around key levels. Okay, now every key level holds liquidity. You must understand this. Every key level you see on the chart, all right, holds liquidity. Okay, now the top liquidity you look at for around this key level is number one, your equal highs and lows. All right, this one is obvious for retail traders. All right, because some people teach it as chart pattern when you say double top, double bottom, but it's actually a liquidity. Okay, it's not just if you are trading chart pattern alone, that's where you might likely fall for the trap. But yeah, understand it like this. Anytime you say an equal highs and equal low, just know that these are retail liquidity. Smart money views it as retail liquidity resting there. Okay, so trend line liquidity is also another type of liquidity you look at around the key levels. Okay, section highs and low liquidity, that one is people that trade based on sections liquidity. New York high, New York low, London high, London low. And there's this particular indicator by ICT that specifies ICT Q zones. Okay, if you on the particular indicator, you can be able to see your section highs and lows. Okay, and if you trade it as your own pattern, that particular indicator is going to really help you. Okay, now if you want that indicator and maybe you could not find it, I would also reveal that on my next class. Okay, you can also check out my other courses on seller.com, because I think I have done like another courses that treated indicators, the indicators I use. Okay, so price usually does not respect the level first, it sweeps before reversing. So this is where many traders gets liquidated. All right, so a lot of retail traders sometimes, well, if we don't change the way we view the chart, we're going to keep making mistakes. Okay, we have to do away with the mentality that we are the ones that move this chart, because your $100,000, your $1 million can't even move this chart a bit. Okay, so retail traders, do away with the mindset that you can influence the chart. No, you can't influence the chart. Okay, so what you need to do is to spot these areas, all right, and plan your setup within those axes, plan your trade within those axes, wait for the smart money to make the move. Now this is a chart example. All right, this is an example of trend line liquidity pool. Okay, and also this is an example of equal highs liquidity. Okay, you can see the price of ZAU forming this equal highs, that's the double top, and then price is slightly heading to go and liquidate those orders resting above the equal highs. Now, immediately price does that and tap this major resistance on the red line zone, you might likely see a reversal heading for this trend line liquidity. Okay, so that is how smart money views this chart. Smart money views this as just liquidity, but a retail trader will view this as a trend. Okay, so spot the difference now. Okay, now this is considered a key level because below the trend line liquidity is a place I marked green. All right, that's a strong demand zone based on the first example screenshot I showed you. So if price comes back here, we'll likely want to buy from. All right, and if price rejected from here, we'll likely want to sell from there. So that's just an example of what I mean. How big players use key levels? Well, institution puts price into liquidity pockets, right? That's the first thing they will do. All right. Now they use these levels to accumulate or distribute. Okay. Now the first touch often fakes the retail traders. Now the real moves now comes after the sweep of liquidity and not before. So your job as a trader is after the manipulation, that is when you trade. You can be able to spot the market when it's carrying out accumulation, manipulation, distribution. That will be one of the greatest analytical skill. All right, you would apply as a smart trader. Okay, so your duty is to trade after the manipulation, not during the manipulation. So a lot of retail traders end up trading the manipulation, and then when the real move starts, yo, man, your money is gone. In fact, I used to be a victim of that. Okay, during the early times of my trading career. All right, then well, you had impulse. Okay, you can jump on any move. All right, so but as a professional trader, it got to a point you begin to build your technique into system, and that is what I've achieved, and that's why I'm handling this particular lecture for my community. All right, so because I know a lot of traders still struggle with execution, so that's why this particular lecture is one of its kind. Okay, and don't forget, if you want this particular lecture, this particular crash course, is up on Seller. Right, I have digital store on Seller that is really targeted on helping traders, become profitable. Okay, so well, we're not gonna force anything down your throat, but yeah, it's just for serious-minded traders, people that really want to trade the way we do and scale up their trading skill. Okay, so yeah, this is the example of what I just explained. You can see in this particular chart. Okay, price broke structure. All right, price broke structure and engineered liquidity had an inducement here. Okay, now trapped early buyers came back again, swept below, swept all the liquidity. All right, now that's considered the manipulation. All right, now that's considered the manipulation. Now we join during the distribution, and that's exactly how smart money moves. That's how they trick retail traders. Majority of the retail traders will be trapped in the fact that this is like a sell, so they're gonna be trapped. All right, and then when the real move starts, they lose out. So this is like a chart example. Look at how price came back and took out the sell side liquidity trap here. All right, and also absorbed all of them before heading up. Okay, now in a similar screenshot, I'm going to also show you a liquidity hunt that was carried later on the lecture. Okay, so the confirmation patterns. Listen, you need to always know that confirmation is everything. All right, confirmation will prevent you from guessing your trade. Confirmation will prevent you from over trading. Confirmation will prevent you from entering too early. Confirmation will prevent you from becoming the liquidity. All right, so these are the areas that you need to always ask yourself. All right, that is what makes the difference between discipline and emotional traders. Okay, this trade you want to execute now, do you have the right confirmation ticked on your trading journal before hitting the trigger to execute the trade? If you don't have, please wait. That is just why a lot of traders are unprofitable, because they don't wait for their confirmation. All right, now being a disciplined trader, right, approaching it in terms of like a system will give you that mind to know that, yo, if I don't see this, I will not behave in a certain manner. This whole thing, that is what makes an emotional trader from a disciplined trader. So yeah, I'm gonna be giving you 4 confirmations you must always wait for. All right, I told you guys that my aim of treating this lecture is, at the end of the day, you're going to come out with a system, a trading system. All right, an execution trading system. Okay, that you repeat each time you come to the chat and you see results, because this has been proven. I've taught my private community this, that I keep teaching this, because why? I know that this is just that particular lecture that when you get it, when you finally understand it, trading becomes simple, trading become easy. All right, and the work of every mentor is to see that, yo, at the end of the day, people come and testify that, yo, this thing they learned, this thing you showed them, they have applied it and it's working for them. All right, so yeah, 4 confirmations you must wait for. Number one, we're talking about waiting for break of structure, or break of structure or break of market shift. Okay, so that is exactly the 2 things you wait for, and you wait for it at a key level. What you should look out for, all right? A sweep, then a break of structure, and then a signal that gives you an impression that there is a reversal. Okay. Now, on the other hand, you look out for displacement candle. You see all those large candle that happens immediately price sweeps the liquidity. All right. You see a counter candle just face the opposite direction, which often leaves a fair value behind. See, that's where you see that the smart money is engaging from. That is where they show their move. That's where they show you that this is the right direction they want to go. Okay, so this is a chart representation of what I'm trying to explain. Okay, so this is the ZAU chart, my private ZAU chart. Okay, so if you look at this chart now, price swept liquidity, all right, trapped sellers that it wanted to sell, all right. Immediately price absorbed this liquidity, all right, it rallied around for a while, and then boom, we saw the displacement. And then according to our rule here, the displacement must leave a large candle behind, all right, leaving an imbalance. Okay, and that candle must show strength. Okay, now at the key level, what happened? We've seen a sweep of liquidity here. We have seen break of structure. Okay, now this is considered the key level. You can see the double bottom here, right? Immediately price swept this. Okay, now we saw this, the fair value gap here around the displacement candle, and then we marked out this fair value gap. Right now, what did we wait for? We waited for price to come back. All right, after the displacement, you must often wait, all right, for the market to retrace into either the fair value gap, all right, or 60% of your Fibonacci. For those of you that uses indicators, all right, the lecture will treat the indicators I use. I will show you guys how I use all my indicators. Okay, all right, and then other block. Once you see this, you will know that okay, you are getting ready to execute. Okay, so in this example, price came back to the fair value gap. Okay, also came back to the other block, which is around here, all right, which formed the rejection block. That completes our criteria number three. Okay, and now we saw rejection candle on lower time frame, and now we saw either the pin bar, the engulfing candle, rejection wicks. All right, all these will give you a fine precision. So this particular lecture, I treated it when I treated the candle Bible. If you don't study your candle Bible, you will not know some particular candle that signifies rejection, or candle that signifies strength for you to go into the trade. All right, now you can see that on this trade now, what we saw was a bullish engulfing candle. All right, immediately we saw this bullish engulfing candle that gave us that precise entry, and then we took this trade. All right, and then price went straight to hit our TP. Okay, so that is how we call this trade. So I'm using this trade as an example to break down this. So this is actually a proven strategy that works. Okay, so you can see that after you write down this system, it's going to give you more precise entry. Okay, all right, so let me just run you through it again. Number one, all right, check your key level, and at a key level, look for a sweep or then a break of structure. All right, now this signals that big players are already about to move the market. Okay, then wait for displacement candle, which leaves an imbalance. All right, you have to wait and see a displacement candle, and after that, spot out your retracement into your other block, your fair value gap, or 60% of your Fibonacci. Once you see that, now that's a clean entry confirmation depending on your time frame. All right, now after that, you move to the final one, which is execution. All right, now that is where you look for final confirmation with your candlestick, a pin bar, engulfing candle, rejection wick, and all this kind of candle indicators. All right, now this is the chart I was telling you about. We use engulfing candle, all right, to enter this trade after price has met all our criteria. All right, you can see the manipulation down here, all right, the break of structure, the displacement, the fair value gap around the other block, price retracing back into it, all right, rejecting nicely, giving me the the fourth confirmation, which is the engulfing candle. And then we took the trade. Very simple. All right, so three-step confirmation formula I use. All right, this is it, the three-step confirmation formula. These are top secret trade, all right, concept I apply. All right, so I'm letting everything all out because I want you guys to be able to go back and back test this, recommend this lecture for traders. Okay, now this is my own community, this is my own approach to trading. So if you ever learn from these lectures, I want you to always drop your comment. Let me know that this particular lecture changed your trading. All right, I want to know that yes, this particular lecture changed your trading. Okay, so I want to know that, I want to be sure that this particular lecture actually changed your trading. Okay, so again, like I'm trying to explain, right, these are the three-step confirmation formula you always apply: a sweep, a shift, a retracement. A sweep, that's where the liquidity is taken. A shift, that's where the break of structure happens. A retracement, that's where the discount is given. That is the heart of a high probability setup. Okay, now write in the comment section a sweep, a shift, a retracement. a sweep, a shift, a retracement. So these are the three confirmation formula you must apply. All right, so I'm trying to help you build a system. In this particular example, we saw it. All right, a sweep first below, you can see liquidity grab below. All right, after we saw this sweep, all right, now we saw the shift left displacement and a fair value gap. Simple, mark out the other block, wait for price to come back, to it, and that's a retracement, a shift, a sweep, a retracement, and then we enter the trade, and we hit TP swiftly and nicely. Okay, so like I'm saying, on this lecture, I'm trying to make you guys build a particular system around your trading. Okay, so what this system will do for you, all right, is going to make you to stop guessing. All right, it's going to give you more emotional control. All right, emotional trades. All right, it's going to give you consistent results. So, and it's going to make you to be trading only high probability setup. Okay, that's why as a trader you need to remove chart patterns from your head. All right, and think of building a particular system. That's what I teach. That is what I teach my students. All right, people that know my community, go down on TikTok, search the executioner FX, go down to some of my trading videos on YouTube. All right, I like to break things down to a point that just absolutely anybody could learn this skill. Okay, and that is what we're doing in this lecture. All right, so yeah, build a system around your trading. That is what this lecture is all about. A system will save you from guessing, save you from emotional trade, all right, give you consistent result, and also help you trade high probability trade. Okay, so well, finally, before I go, I'm going to be giving you the simple but powerful system that must keep you disciplined as a trader. Okay, and that's why the system I've used for myself and my trading community. All right, so this particular system is just it's very simple and direct. Okay, step one: identify your key level. All right, you can write it down, write it somewhere, get a notepad, get something, write it down. Your step one, whenever you come to your chart, first step, identify your key level. Use higher time frame to achieve that. All right, a 4 hour, a daily, a weekly, whatever it is, but then identify your key level. Okay, daily, 4 hour. Now mark out the liquidity above those key level. All right, also observe the overall direction of the trend. If the trend is not clear, stay out of the market, stay out of that particular commodity. Okay, so that is it, the step one. Okay, step two, wait for manipulation. The liquidity that you've mapped out, wait for either a stop hunt or a sweep or a liquidity grab, whatever you call it. Just wait for it. All right, because that's likely the manipulation. That is how smart money manipulates retail traders. Okay, now do not enter during manipulation time. All right, that is the time to crock your gun, think like a hunter. Okay, now after that, let's look at this example. Okay, this example just further explain the execution system. Okay, you can see on this particular trade, right, what happened was that price had a liquidity run, okay, and had a stop hunt here. Okay, a liquidity grab occurred here, grabbing this buy side liquidity. Okay, so price must have, whoever was buying from here, price must have lured them. All right, okay, price also absorb the liquidity here, a sell side liquidity here before running up. Okay, so this particular trade was what we caught on this particular side. All right, we caught it on this particular side. This was the trade we cut, okay, on this particular side. All right, so the return is what I'm showing you now. All right, so that very day we actually cut the buy and then we cut the sell, applying this same execution system. All right, so immediately we saw the liquidity purge. All right, taking out this buy side traps. All right, we waited for a pullback, all right, into the sell side. All right, and then we saw that price rejected nicely. All right, and then we took the trade, applying the same principle. Identify key level, wait for manipulation. All right, these are the key level. All right, waited for manipulation. Okay, and then we engage. This was another chart, all right, to use to illustrate this. You can see this is a ZAU chart, all right, my recent ZAU chart. Okay, I marked that major resistance level, I marked that major demand level. Okay, this is actually a weekly projection of ZAU just to show you the step one, marking out your key levels, okay, and then waiting for manipulation. At this point now, see this high right here, okay, so that's a weekly high that has just been taken out, okay, and now price is beginning to react back, okay. Now the step three is to look for confirmation pattern. You must see either a break of structure, a displacement, a fair value gap or other block, or a rejection candle. Okay. Again, after that, you move to your lower time frame, and that's where you pull the trigger. That is where you execute. All right. And you execute that from 1 minute to 5 minutes time. All right. Now let me see on the chart. This is it on the chart. All right. After applying this principle, we marked at our key level. Okay. Waited for a manipulation. All right. After that, we waited for a displacement, okay, a confirmation pattern. We marked out all these criteria down here, and then price gave us that precise entry with this engulfing candle, and then we took this particular trade. All right. So if you match this particular lecture and you really sit down and back test, you're gonna see results. You're definitely gonna see results. Okay. So another sensitive side I decided to add on this particular system is risk management. Okay. Step five, what's your risk management? And that's the part that most mentors won't tell you. All right. So personally, I gave you guys my own personal risk management output. So I risk 0.5 per trade, okay, and my maximum trade is 2 trades per day. Okay, so my stop loss is usually below the liquidity that was taken, and then my TP is usually above the next liquidity I'm aiming. So that's exactly how I approach my chart. Okay, so you can copy this exact execution system I use. All right, then the step six, I always say journaling trader is a consistent trader. Okay, so step six is where you review yourself during execution, and then practically write down what happened, okay, why you entered, confirmation need you used, right, your key level involved, the outcome, what are you going to improve on next. Did you have fear? Did you have FOMO? Were you impatient? This is how you study yourself, all right, and build consistency as a trader. And that is part of what I teach on my trading system. Okay, I'm giving you a whole system breakdown, how to think like a trader. Okay, now the conclusion, I've shared today everything I do as a trader, right? Everything I've shared today is what separates struggling traders from consistent, profitable traders. Okay. So if you only trade key levels, wait for the right confirmation, follow your execution system strictly. All right. You drastically reduce losses and increase accuracy. And that's just the truth about it. Okay. Now, coming up in the lockdown mentorship, I'll be diving deeper into institutional order flow, liquidity mapping, and all these other topics. Or I'm just giving you a heads up why you should not miss any of my new videos. All right. So make sure you're really ready. All right, for this December mentorship. I remain your boy, Executioner FX, and I'll see you guys in my next class. If you want me to actually reach out to you one on one, leave a DM. Okay. Um, Again, I have the courses on seller.com. All right, all these crash courses I use, you can grab my trading materials up on seller.com. All right, so see you guys in my next video.